Back in March of 2019, I decided to put my money where my mouth is and test out investing in an M1 Finance curated REIT and the crowdfunding real estate investing platform Fundrise to see which one is better. Not everyone is interested in investing through traditional real estate either in the future or at this point in time, but still want some exposure to that asset class. So using a platform like Fundrise or an M1 Finance REIT is way more appealing. In this video, we're going to go through the results so far, and I'll give you my thoughts on if, when, and why it would or wouldn't make sense for you to invest your money in either of these two platforms. Hey money nerds, I'm Jarrad with an A, and on this channel, we like to talk about all things personal finance and investing. I'm going to log into each account separately, go through the details, then give you my final thoughts at the end. It's actually been really interesting to see how both of them react. I have review videos on M1 Finance and Fundrise separately that I'll link down in the description below if you want to take a deeper dive into understanding them just a little bit more after this video. In those videos, I break down more of the features associated with each one. So if you're looking for that type of thing, then check out those videos. The initial amount that I invested in each platform was $1,000 on March 1st of 2019. I set both of them to reinvest the dividends since I'm looking for overall growth as opposed to a monthly or quarterly stream of income through dividend payments. If you decide that you want to open up a free account with Fundrise or M1 Finance, then I would greatly appreciate it if you use the links down in the description of this video to do so. It helps support myself and this channel, and my dog Molly would love you long time. Before I dig too deep into this video, I just want to point out that the returns that you see are from a very short period of time. This should be no indication as to how each of them will perform over the long term. As we know with all investing, they'll go up, they'll go down, they'll earn money quickly at some points and possibly a little slower at other points in time. In my opinion, investing should be looked at and treated as a long-term play, period. If you were looking to make a quick buck and need this money within a 5-year period, then these are not going to be good places for you to invest your money. The goal for me when investing in each of these platforms is to keep up with the average market returns and to diversify how some of my overall net worth is being invested. If you get any value from this video, then please do me a huge favor and Hulk smash that thumbs up button and let me know down in the comments below your thoughts on Fundrise or M1 Finance. Okay, so we're going to go ahead and take a look at my Fundrise portfolio after 10 months. So I'm filming this at the end of December of 2019, and so far I've got a return of $1,074.95. Now this is how the breakdown is right here. Let me pull something up. The breakdown with dividends, see we've got $50.71, and the appreciation is $25.58, and there's the fees that they've taken out so far, which isn't too bad at all. So we'll call it a $75 return at this point after 10 months. And we can actually go into the performance to see how everything has been going with Fundrise. When I deposited that initial $1,000, what happens is they spread it among a couple different E-REITs that have different goals and things like that, because there's different projects that are ramping up, like when they acquire new properties and stabilize new properties. So as you can see right here, this kind of gives you an update of what each E-REIT is doing. So some are ramping up, so they're kind of working on projects for each property that's within this E-REIT. Some are stabilizing, so they're kind of in the process of getting them going. They're a little bit further along in the process, and then some are under operation, so they're fully operational. And you'll notice that the ones that are fully operational, there's higher returns. So this is a dollar amount. Let's show you the percentage. Usually higher returns. So you can assume that as they're ramping up, of course, there's not going to be a big return on your investment. But we're going to assume that the ones that are ramping up and the ones that are stabilizing will have higher returns once they kind of get going and they're fully operational. What's nice about the performance here is you can actually go into each individual E-REIT. So I'm going to go into this growth one, and it gives you a breakdown of where your returns are coming from. So the returns in this case, $3.95 are coming from dividends, and $14.32 are coming from appreciation. And I'll go through dividends and appreciation here in a minute, but just to give you an idea, they're very transparent with all of that. So going back to the performance, so you can go into each of these and kind of see what's going on. Now, let me explain the dividends and appreciation. I pulled something up for you. So the dividends, this is how essentially dividends are how you earn dividends. So real estate can generate returns in two main ways: income and appreciation. Dividends are the distribution of this income and can also include other sources such as return on capital. So the return on capital could come from loan interest payments and also equity income. So when you receive rent, so any kind of returns you receive from tenants paying their rent every month. And this debt portion, let me show you what that means. So within your Fundrise portfolio, you've got a bunch of different projects going on. Now, some of them are structured in certain ways. So here's one property within my Fundrise account, and it's structured for debt. So that's how you expect to get a return on your investment with this particular property, is based on debt. Here's another one over here. This one is more of an equity play. And then so on and so forth with every other property that Fundrise is going to invest for you. It's going to be a mixture between debt and equity, especially because what I did is I chose the balanced investing. So you get three options when you invest through Fundrise. Supplemental income, so you're trying to get a lot more dividends, if you notice right there. Balanced, which is dividends and appreciation and average or middle of the road total returns, or you're going for more appreciation, so long-term growth. I chose the balance investing. So this is the one that I chose because it was kind of just the middle of the road. I wanted to see how it would do, or how it would perform, because I wasn't too worried about the dividends, more dividends than I was appreciation, or vice versa. Appreciation, let's talk about that real quick. So how you earn appreciation or earn a return on for appreciation. So in addition to the rent, the value of the real estate may increase or decrease in value over time. So that's the appreciation portion of this that you're seeing, where that's coming from. As time goes on, I would imagine the dividends is going to continue to go up at a higher rate than appreciation, is my expectation. And one other thing I want to point out over here, so of my portfolio, they have different ratings. All of the properties have different ratings, and Fundrise has a whole rating system of why a certain property is rated a certain way. So I'll throw a link to this in the description for you to check out. That's kind of how everything is broken down. And as you can see, if I go back to my Fundrise account, they give you a breakdown for all of the ratings for each of your properties over here. And they have it color coded as well. And what else you can do is you can go into your portfolio and you can actually see your whole portfolio and the property. So 112 active projects is what I've got going on right now. And it's funny because I've actually gone in and I've done a Google map search for some of these properties, and you can actually go see it if you really wanted to. You can physically see that it's there. These are real investment properties that you're putting your money into. Now with Fundrise, if you're okay with your money being tied up 4 or 5 years, then it's a very good place for you to invest your money to diversify into real estate without actually investing in physical real estate. I would expect that these returns are going to increase as time goes on, as a lot of these properties stabilize and things like that. And also, since I am reinvesting my dividends, I should see more portfolios be added on here, because I'm not taking any of the cash at this point. And so I'm pretty happy with it so far. The growth is going to be a lot more stable than what you're going to see with M1 Finance, because M1 Finance is tied to the stock market, so the return is going to be a little bit more volatile. Once again, I'll show you how volatile when I get into that portfolio. But here, I've just seen a consistent, steady growth. It was a little slow at first, but it's kind of picked up a lot more than I had expected. So $74 is what I've earned in 10 months without doing anything, and that's just investing $1,000 too. So going forward, I'm probably going to invest some more money in here. This is my M1 Finance portfolio, and this is actually a real estate expert pie that they had created for me. So what M1 Finance has is they have expert pies, and that's where you can kind of choose a pre-made pie for yourself. So let me go back to my investment, and once again I deposited money for M1 Finance $1,000 on the same day as Fundrise, and it got invested. And within this real estate expert pie that they created for me, they did the pre-breakdown. So they chose what the target percentage was going to be for each of these REITs that I invested in. Now, honestly, I probably could rebalance it. I have not done that yet. So if you look here, you've got the actual and you've got the target. So for Crown Castle International, there's a target of 9%, but since I invested, I've actually got 10.7% of my total investment in Crown Castle International, so I probably should rebalance this pretty quick here just to get myself back to where it should be. And then here's another one, American Tower Corporation. The target is 15%, but it looks like I'm only at 8.9% right now, so I'll probably rebalance this soon. So as you can see, my return is $102.91. Technically, it's $102.91 plus $6.72 up here. This is just cash on hand because with M1 Finance, they'll auto reinvest once it hits $10. So that's once that hits $10, it'll get invested in my portfolio. So technically, it's $109, but we'll just call it $102 at this point. So it's obviously different from Fundrise. So here's my Fundrise account. So $74.95 return compared to a $109 return and some change. Now, if we go to gains here, we can actually see where the return is coming from. So $81 of it are market gains, and then $33 are from dividends. So if you compare dividends to dividends with Fundrise and M1 Finance, you'll see that Fundrise wins all day, right? Because our dividends are $50 at this point. So one thing I do want to show you though is when you're investing in this expert pie in a REIT from M1 Finance, you are going to have a lot of volatility, which I had touched on before. See, so I mean, within the year or within the first 10 months, you know, I've seen it go up and down. So the highest high was $160 gain, which is really good. You know, I'm really happy with that. So far so good. Return is 11.56, which I'm happy with, but this is going to be more volatile if you're going to invest in a REIT on the stock market, and this is just proof right here. Of course, this is an expert pie that M1 Finance curated for me. There's other REITs out there that you could use, like the Vanguard REIT. I don't recall what it is, what the symbols are at this point in time. So let's finish the video with my final thoughts. Now let's get into my final thoughts. Don't forget that if you're going to open up a free Fundrise or M1 Finance account, then I would greatly appreciate it if you used my links in the description of this video to do so, because it helps support myself and this channel, so thank you very much in advance. I'm really happy with how both platforms have produced so far. They're both investing in real estate, which is a good way to diversify my investments just a little bit more, but they kind of react a little bit differently. With the REIT traded on the stock market, you're naturally going to see more volatility like I have with the value of my investment skyrocketing up to, what was it, 16% return, and then eventually dropping back down to 7%. I expect to see this sort of thing with this investment going forward. With something like Fundrise, you're going to see growth, but it's going to be at a steadier pace and pay off more over the long term. It's not going to be as erratic as a REIT traded on the stock market. I'm a big fan of both of these investments, to be honest with you. I personally love the M1 Finance platform in general for investing, and it's the platform that I invest through for the majority of my money in the market. Fundrise has impressed me enough to where I'm going to start investing a little bit more money through the platform to kind of diversify my overall net worth just a little bit more. I'll make more Fundrise update videos in the future, so look out for those. Check out my Fundrise and M1 Finance review videos right here to your left. Also, check out the description of this video for more resources and playlists to help you out with all of your personal finance and investing needs. I'll see you in the next one, friends. Oh yeah, don't forget to Hulk smash that thumbs up button. Adios.